Welcome back, everybody, to the daily show while we're breaking down the stock market. So, before we get started, please hit that like button, and that is greatly appreciated. And if you're new here, definitely consider subscribing. Now, if you want to go above and beyond, support the channel and get all types of daily trade ideas, swing trade ideas, all kinds of long term and short term setups, definitely head over to Patreon, and that link will be down below in the description. And with a lot of volatility right now, this is the right time to join. And now let's get right into the market. All right, so welcome back once again, guys. And yes, market pretty much sold off once again. We saw the initial rally taking place pre-market. Last night, futures market was down, but then overnight, market was up 1%, and then we gave all back. And that is due to what's happening with Strait of Hormuz. You can see, I mean, that is putting pressure on the entire world and everywhere. You can see the oil definitely settling above $100 a barrel since 2022. So that is the main concern. I don't think if we were just fighting with Iran or anybody, I don't think market would go down. It's all about Strait of Hormuz and oil. That's the only thing. Who dies, who wins, who loses, nobody cares. War typically is bullish. But this war is a little bit different because we have a closure of Strait of Hormuz, and this is why the energy stocks, just going up and oil just rocketing up to the upside, and that's why you're seeing market taking a hit. Now, fear and greed index. I don't know, and I don't know when was the last time I actually saw a number, a single digit number, guys. That is really insane. Just nine. It was 10, but with today's sell off, it went down to 9. So that is really bad. If you're thinking about shorting the market, all I can say with this, sitting here at 9, extreme fear, heck no, I'm not shorting anything. And you can see the investor sentiment 50% are bearish, 18% are neutral, 32% are bullish. So, majority of the people are extremely bearish. As a matter of fact, we didn't go down that much, but all I saw over the weekend is how bearish people are on X and also on YouTube. And guess what? We had that initial rally, right? Now, what market did today, you can see declining 53, advancing 42. So, kind of a I wouldn't call this 50-50, but it wasn't that bad, right? Now, Dow was slightly up. Nasdaq, which was also up but gave it all back, down 0.73%. S&P down 0.39%. Russell down 1.44%. 11 sectors. Financial led the way. We had calls on XLF, and this was really nice. This thing popped, and we made money on that play. Consumer defensive was also up here. Utilities, healthcare, real estate, and then you got communication services. That was basically a meta. Basic materials, consumer cyclical energy took a hit a little bit, but this is nothing compared to how much energy is up. You can see even week to date performance, and it's only Monday. Still from last week, it's up over 3.5%. Technology definitely lagging behind, and then we have industrials. Stock market map. Well, mainly the big name was Nvidia and AMD semis. They took a massive, massive hit today. I think SMH went down for a daily low from the previous low we had on the daily chart just a couple days ago. Meta was up 2%, Amazon up 0.81%, Tesla down nearly 2, Apple down 0.87%. Microsoft was up at one point, I think nearly 2%, but gave it all back, only up 0.61%. But the big sell-off that took place, it's right here. MU, Broadcom, AMD, Intel, they all sold off, including Nvidia breaking down from that range, and now it's down 1.40%. And now I think we need to talk about S&P 500. So let's get started, guys. On SPY ETF, it's down 0.33%, but early morning where we opened at 640, and this was just a short-term play. This is where I actually got into some puts, nothing crazy because the market is oversold. We're actually into extreme fear, and this is not a zone where I would like to go short and hold that. So It was a nice juicy profit. I think I caught like $4.50 to the downside. It was more, but these puts are short term, so got out for a little bit of profit. But this is where it's time to at least think about going long. And a lot of people are scared. If you go on YouTube, you'll see most videos are saying Black Monday over the weekend, and crash 2008, 2009, whatever, just crash, crash, crash. That's all you're gonna see out there on YouTube, and especially on X or Twitter, whatever you want to call it. That's all we're seeing right now, that how bad things can get. But people forget what this market can do to bears. Just a good example, when everything was ending, like this is it, market is about to crash and go down to zero. What happened from here? We saw the most vicious rally to the upside to a new all-time high within just, not even a year, guys. We're not into April yet. And we hit all-time highs, and from there, usually you get 10-15% correction every year. And that is money coming to your pocket. It's not where you want to go and short. Short was here. You can see many videos I made when the market was at all-time highs. I said I'm not trying to go long here. I'm not interested. I'm bearish here in the market when the market hits all-time high. And now that it's time to load up the boat, people are just shutting their door and just running and saying that I don't want it. Market crashing. I'm just gonna buy puts near the lows. And guess what? We haven't seen that face ripper rally yet. We have seen some, rallies, a tiny bit of rally to the upside, but trust me, it's gonna come. And people that are shorting near the lows, they're gonna get absolutely destroyed. We have seen that many, many times. People go extremely bearish, and especially I can speak for myself and retail traders, investors. We go short near the lows all the time. Where smart money is loading up, we go short. And guess what? What happens? Market rallies. Let's say SPY goes up $30 in 2 days. What's gonna happen to all the bears? They're gonna get crushed, and they're gonna cover. So just because market going down, look at it at this angle here, especially on a weekly time frame. The weekly expected move to the downside, it was 614. So even if we come back down here, we're just retesting the monthly support, and this would be a nice, juicy dip about 12-13%, which is absolutely fine. Nothing wrong with that. Anytime market goes down, there is some sort of a catalyst. 2022 rate hike, inflation. Then we had correction, especially we didn't have big correction since last year with the tariff, and that was one reason market went down. But what happened, right? Now it's a little bit different. I get it. Trump saying one thing, and then Iran coming out and immediately saying that we don't have any talks. I don't know, and we don't know who actually he's talking to, but we don't have a deal. We're not looking for a deal. And I think it's just getting to the point where I would say, it's just enough, because yes, I would give it to Iran what they're doing right now, but especially when you look at it, they don't have what it takes to like just go and get over United States. They just don't. We haven't gone all out yet, but this war, I'm not saying go and do that and just kill people. It's gonna be a lot of people dying, and nobody wants that. We want this thing to stop. Strait of Hormuz to open. Things needs to come down. That's all we want. But right now, we have a deal. Then Iran coming out and saying we don't have a deal. So who do you actually trust? Nobody, right? Trump tried, to play bullish here and putting out positive news, but it's not really working out. So I think what we need is actually a real catalyst, some sort of a negotiation deal, peace deal, ceasefire, where uh, you know, people that are actually in Iran running the country, they need to come out and say we have a deal, or some sort of a ceasefire, peace deal, something. That's when you're going to see that spark back up to the upside. I think mainly, not even that. If the Strait of Hormuz is opened, whether it's through a force or through a peace deal, that is when you're going to see the market rallying back up to the upside. So we just got a catalyst, and that happened to be this war. And just because market retesting that monthly support here does not mean that we're just gonna go and burn and go down to zero. So people that are shorting, very dangerous game you're playing with the market. So going into tomorrow, you can see we broke the weekly 50 SMA, which is right down here, and we did not even fill the gap from last week, 645ish here. And today's rally immediately faded. It was a gap up and go, but the gap faded immediately. And as a matter of fact, we closed at we actually made bar to bar a new low. So there is gonna be support here. You can see a bunch of levels like 626, that 632, which is holding into closing. But I think the focus should be right here. That previous all-time high, it's going to be around, I would say, 600 to that 614 level right here. You can see a lot of trading before we had that correction or that sell off into the tariff thing we had last year, and now we're coming back into this area. So even when you look at the volume profile, you'll see that, what do you see here? A lot of volume here. So even if the market pulls back, undershooting this level, maybe goes like 600 flat, maybe slightly under, filling the gap maybe here like 592. I think that's totally fine. That's totally fine. It's still, in an uptrend on a higher time frame, and nothing wrong with that. So watch out, especially when market coming down in a straight line. Don't forget, even if we get some sort of a counter trend rally, people will start chasing. People that are shorting, they will start covering, and that rally will be a vicious rally to see in the market. And it's going to happen. It's going to happen whether you like it or not. If you're just a bear shorting the market, it's going to happen. Nobody is going to stop that, a rally, especially when you see fear and greed index sitting at a single digit, guys, 9. Comment and say when was the last time you actually saw that, because I can't recall saying 9 on fear and greed index. So going into tomorrow's session, if we can hold around that 632, maybe 630, maybe we get to see a rally back up to 638 into the gap right here at 645, and you can see that is in line with this negative sloping 5-day moving average. Now, far as RSI, quickly daily 27, so we are getting really oversold to the downside. Now, quickly, I do want to look at SMH. And why? Because this is one of those things that is actually breaking down. So this was a previous all-time high. You can see that right here we got a rejection, double top. We had the sell-off, we came back up, and then boom, went into a new all-time high. And today we broke down from that level. And where did we come down to? All the way down to that 360. We went slightly under. So it's getting also oversold. We left a gap open here, 396 almost, and things are just going down with Nvidia. So if this thing does hold here at 360, I think there is a chance of a rally back up to 372, maybe even into 378, possibly even higher. If this thing does not hold, yes, there is going to be a little bit more downside, and this one is not that oversold. No, it's not. So 360 does not hold. We could see a pullback into that 348, possibly into 335. And when you look at the weekly time frame, I mean that is just pulling back into this area around 320. It's definitely reasonable here on SMH. Triple Q, you can see here this one closing near the lows, and this also getting into that oversold condition. RSI 28, and we did not get over that 566 today, 567, let alone not even filling the gap at 573. So if this thing comes down a little bit more, watch out for that 550 area to hold as a support. If not, we're not too far away, guys. We're not too far away. When you look at the weekly time frame, look at this. It's right here. 541, previous all-time highs on a monthly scale. This would be then, a critical area of support to hold, and the monthly 20 SMAs at 545 as well. Now, can we undershoot that level and go down a little bit more? Absolutely possible, but this is not where you want to go short. If you're going long, you want to go long slowly. You want to have money to add into your position as the market pulls back even more. There is a bunch of gaps down here. I don't know if we're gonna get down here at some point. That would be even better. But as of right now, market pulling back and things are getting really frothy to the downside. If we get some sort of a rally back up to the upside, watch out for the resistance here at 566. If we can get over that, we might see a move up to 573 to close the gap here, and then we can talk about possibly more upside. On Dow, it's up 0.15%. So it was up 1%, but gave it all back. And we pretty much came down to low of the day and closing at a, almost low of the day, just bounced off of 450. You can see there is some support at 452, and just underneath that, we do have support around that 449, 450. There is a gap there. If we come down here tomorrow, that would be an area to look out for, and there is another gap at 445. Now, this one here already had a 10% correction, and if you look at my screen, where we are trading actually on a monthly scale, we're not too far off. We already hit this level. We're breaking below that level, but right here, just right about here, 448, 450. This is a key zone here for the monthly support to hold, and you can see high volume node here, and that would hold if the market comes down. As long as we hold here, I think definitely watch out for counter trend rally back up to the upside. Today we did not even get up to that 548, so watch out. If that breaks, we might fill that gap all the way up to 559. Over that, there will be resistance at 461, and then we could see 464. And don't forget, we got a bunch of gaps to the upside as well. And the closest one would be 470. So even if we get some sort of a counter trend rally, this thing can rally easily $20 to the upside and set up a lower high before going down even more. On IWM, it's down 1.44%. But if you look at this one here, already retesting these highs and pretty much just breaking down. So, maybe on a monthly scale, we can come down a little bit more into like 230. That would be a key zone to watch. 231, 232 right here, where we had a lot of, chop. Then we had went into a pullback. We came back up, and the same thing happened here. And then finally, we broke out to the upside, and you can see a couple of months of green candles, and we're just pulling into the monthly support here. So just maybe another 8 to 10 bucks downside here, as long as you can hold this level. I think here on small caps also there is upside potential. So if this one can hold and stay over 241 tomorrow, watch out for a move possibly into 245, 247 to close the gap on top. And VIX once again only down 1.42%. I mean, I think this thing was under 30, almost down to like 29. But a sticky VIX, it's not actually coming down. And it's been a couple of weeks, guys, where this thing is just slowly grinding higher. And now it's holding around that 30. So, I mean, where this thing can go? Well, maybe we retest 35 again. And finally, we put in some sort of a short term bottom in the market. Because if you look at my screen, last Monday, it was right here. This thing got crushed all the way down to 20. And look at how fast the same day was closing at 26, and within like 2 3 days now we're back over 30. Even today was not especially it was not when you look at the daily time frame. Look at this, there were dip buyers coming in, and this thing is not able to stay down under 30. So what you want to see here on VIX, slowly this thing moving down under this red line here, which is at 28. If that happens, not only 30 needs to break, we need to get under 28. Then slowly you'll see VIX heading down to 26, maybe into 24, into that 20. But at some point, guys, I'm telling you, this is where VIX was before. I'm not saying it's going to come down here immediately, but I don't see VIX going up that much and not coming down. It's been elevated for multiple weeks now. And soon as we get some sort of a catalyst, which is going to come at some point, if that happens, this thing will get back at least 15 to 20 bucks, not in one day, but and that's gonna be the bottom where market will put in some sort of a short-term bottom, and VIX will get crushed. And this week, 4 days of trading. So Friday market will be closed for, I think, Good Friday. So 4 days of trading. This is actually a long weekend. So we'll see how things play out. Quickly before we wrap up this video, I want to look at dollar, which is putting pressure on the S&P 500. We flagged, we broke out. Now it's over 100. So things are looking really scary here. And you can see the dollar from this bear flag pattern is trying to come back up here and just holding over 100. So if this thing rises back up a little bit more, and possibly if you look at my screen, we actually made a higher high today. So if this thing holds over 100, maybe we come up and retest these highs 101 into maybe even 101.83. If that happens, there is a little bit more downside in the S&P 500. So watch out. Dollar rising, yields are rising. You got VIX rising in this environment right now. Yeah, it's not bullish. I'm not saying we should go all in and just wait for that big rally. That's not the message. But shorting into the whole new money short, I think definitely you have no chance. You have zero chance of surviving in shorting into the whole right now. And if you're doing that, all I can say, guys, is a really really bad trade, and that can actually hurt your account and yourself big time if you're shorting into the hole. So be careful. If you're not buying long, that's fine. Wait for the setup. Wait for to see if the catalyst comes in, we get some good news. But especially going in and shorting now, as market getting into those oversold condition, and fear and greed index now single digit, 9, only 9 reading, guys. So you got to think about it. And we all know, we have seen it, with the COVID crash, with a 2022 bear market, the recent tariff, crash that we had last year, the market usually goes up. So yes, the world is ending. That's how it feels like when you go on X, when you go on YouTube. Like Black Monday is coming every Monday, right? But did we actually go down even 4% in a day? No, right? So it's been really controlled selling in the market. People are still panicking, and mostly these are retail traders, investors panicking and trying to short the market. Yes, some cases they're making money, but it's really bad thing to do right now if you're shorting near the lows. And that's all I have for you guys in this video. Thank you so much for watching.